Hi, everyone. Welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. Thanks for joining us to live stream. However, FYI, this was actually pre-recorded, but only a couple hours ago. Before we get started, a quick reminder, nothing you hear on Unchained is investment advice. This show is for informational and entertainment purposes only, and my guests and I may hold assets discussed on the show. For more disclosures, visit unchainedcrypto.com. Today's guest is Marc Boiron, Chief Executive Officer at Polygon Labs. Welcome, Marc.
Hi, Laura. Thanks for having me.
Yeah, nice to see you. So Polygon had a big announcement on Tuesday, which is that it's becoming a US regulated payments platform. And as part of that move, you're acquiring Coinme and Sequence. And the goal is to move all money on chain. So explain what this means.
Yeah, so one thing we've been doing for a long time, obviously, is building out the Polygon blockchain. And we've been talking to institutions for a very long time, including in the payment space. And, as we figured out that blockchains are going to become specialized in certain use cases, we also looked at where it is that we're particularly strong, and it was in the payment space. And so we kind of doubled down on that probably about 12 months ago with real significant efforts in the last 6 months. But on top of that, what we realized is we're having all of these discussions with, the fintechs, banks, enterprises, merchants, and all of them are talking about how hard it is to use stablecoins, which is the opposite of what all of us are saying. And it's not the actual transfer of stablecoins that's hard. It's them actually offering stablecoins, basically as a service for others to move money. And the simple reason is because they'll come and they'll talk to Polygon, and then they'll talk to 3-4 other blockchains trying to decide what to do. And then they'll go and they'll say, well, I need on-ramps and off-ramps. So who should I talk to? And they'll go talk to a few folks. And then they're like, I need a wallet. And they'll go talk to a few folks. And then they're like, I heard about this interop thing that I should probably worry about. So let me go talk to them. And you run into a spot where these cycles to get, companies on chain taking months and months, often over 6 months. And our view is we should be able to offer one API that gets plugged in that allows them to move money or offer moving money to their customers around the world and not need to worry about all of that complexity.
Okay, yeah, that makes a lot of sense. One thing that is obviously interesting here is that Polygon has been a more general purpose sidechain, or L2 you could call it, on Ethereum. So am I right in thinking that this shift is that Polygon will be more like an app chain, and specifically a B2B app chain, which in a way to me is very similar to like a codex? Am I thinking about this correctly?
Yeah, so I think there's generally been this, like the space is generally consolidated around like this idea of either you're a general purpose chain or you're an app chain. I'm like very much a believer in this idea of like sector specific chains, right? So you're not just offering like one app and that app is going to fill all of the block space, which in some cases makes sense, by the way, right? In our case, it's more like we see a use case that could benefit from specialization. And if we can actually provide that specialization, then it'll be a better experience for anyone who wants that use case. By the way, I do assume that in 3 years from now, there'll be some payments use cases that are so big that like it'll make sense to have an app chain just for that. I don't think we're there yet at all. And so I don't really think of Polygon at all like an app chain, but I do think of it much more like a sector specific chain focused on payments.
Okay. And so because there actually already are some more kind of general purpose apps on the chain, what will happen to those? Most famously, Polymarket is on Polygon. So I was curious, like, what that means for existing apps on Polygon.
Yeah, so I think it all depends how you define payments. Like people think of payments as just being, hey, you're transferring money back home cross border, and that's the only use case. But if you think of like most things you transact with. So take a video game. So people can say, well, you're not a gaming chain. It's like, okay, cool. Like if you want like NFTs within your game, Polygon probably isn't the best chain for that. There's probably another better chain. But if you want to offer like a better, like an easier ability for your users to on-ramp and actually like use their money to buy in-game items and actually like buy things within a game, that's actually probably a good use case. It's just a payments use case. I view Polymarket like very similar to this, which is the idea that like you come in, all you're doing is you're transferring like USDC to like buy a position. That's basically what you're doing. Now, one of the things that we did is we announced kind of like our vision of what payments will look like over the next 10 years through what we call like the open money stack. And one thing that was like really important that when we described what it was we didn't just say, oh, you can move money anywhere in the world. We said you can move money anywhere in the world and you can put it to work. Because ultimately, if we just want to like move money around the world, we can just look like a Web2 company. You can on-ramp, you can move your money, you can offer. But like ultimately, like we want all money to live on chain. Money on chain is a better experience. The only way you do that is if people have something to do with their money on chain. And so there are definitely like simple things that you can do with your money that like we would expect people to continue to do on Polygon. So you can earn on it, for example, right? That would be an easy example. We also are totally open, and we've been working on like cross-chain interop for a long time because of our view on this, that like people will form their own, chains and they will move money on Polygon, and they need to seamlessly just be able to like earn on another chain or swap on another chain. And that's like perfectly okay. And so, yeah, like all the apps that are currently on Polygon, I think they'll be very useful for those who who are moving money. And over time, as they get bigger and bigger, they'll probably look to say, hey, can I get an even better experience if I offer my own chain?
Oh, interesting. So it sort of sounds like there will be some period where these apps exist on Polygon, along with Polygon's purpose to be this, kind of full stack payment chain, and then eventually some of them might move off. Is that what you're?
Yeah.
Okay.
Yeah, I think most apps that end up being successful will be so wildly successful that they will want their own block space. I think that's just the case, period. And so they will naturally choose to move off. Frankly, they would choose to move off even if we didn't specialize in payments. That's just what would actually make sense for them as a business. And so I think that is eventually going to happen. Until then, we can offer all of those useful services that people want to do with their money. They're available on Polygon. It's one of the nice things about Polygon. But like by the time that they actually choose to go and develop their own app on their own chain or move their app over there, well, now the nice thing is, because Polygon has believed in this interop and has been working on it a nice time, you can seamlessly actually go and have that experience that we're having pure on Polygon. You can have it on another chain.
Okay. And so Polygon has been around for a while, and I was curious why you're making this shift now. You've been explicit that this is about generating revenue, and I wondered, what is it about this moment in time that makes it important for Polygon to prioritize cash flow?
Yeah, so I think there's a couple parts. So first, the shift to payments is something that's happened probably about like 12 months ago is when we decided to do that, right? Like acquisitions of the type that we're doing and the work that we're doing takes many, many months to actually play out. So it's definitely a shift that's been in the works for a while. In terms of like the revenue generating side of things, Polygon's long time been, I would say, the one that has mostly spearheaded this idea of like actually not generating revenue. So because we've been working with enterprises for so long, we used to have offers all the time of like enterprises begging to pay us. They actually didn't understand this concept of like doing business and not paying somebody for a service they're providing. But the reality is we weren't providing the service. The service was provided by, the over 100 validators on Polygon chain. And the reality is now we are shifting into a world where we are providing specific services so that we can make it even more desirable to come. And we should be paid for that. And what that means is that we will have more, frankly, cash to just be able to more aggressively execute on this than if we continue to say, don't worry, you don't need to pay us. This is a free service. It's not. And I think if we want to give the best service possible, then we're going to actually charge for it.
Okay. And so you said that your customers will now be banks, fintechs, enterprises. And I wondered, so is the thinking that this is something similar to a white label product where they're using Polygon's, stack on the back end, but, the front end is, branded around that company? Is that how it will work?
Yeah. So I think there's going to be, there'll be an evolution, but there's multiple services, right? You've got like a B2B service, you've got a B2B2B service, you've got a B2B2C service. And we don't really think of ourselves as being like B2C category at all, right? And so in that context, there will be B2B offerings. So for example, if you're a treasury manager at a company and you want to move money around the world, then you would use the Open Money Stack to do that. And then you would use it to earn, and you would choose to not move your money off chain because why you want to pay to off ramp and then on ramp again, when you can just sit there and earn in some RWA investment that you're holding. So those will be like direct users of the Open Money Stack. And then what we'd expect is that, as the Open Money Stack gets built out, we would also be offering it to a fintech, for example, that says, hey, I want my users to be able to like move funds around the world. And I'm trying to decide what solution, what makes sense. And they would choose to use the Open Money Stack.
Okay. And do you have a sense of like what size customers you'll be going after? Or is this really for, even small businesses as well as large, multinationals?
Yeah, so I think part of this honestly has to do with like some pricing decisions that we're trying to figure out along with Coinme and Sequence teams as we brought them in. But when we think of where we are strong historically, it's been in the large enterprise and institutional relationships that we've had, and so that is most likely where we're going to start. Now, that's a little bit different from where Coinme's been strong historically. And this is part of the reason why there's a lot of synergies here. And same thing with Sequence, actually, where they've served more of like, I'll call it the longer tail market, in some cases enterprises as well, but generally speaking, more that mid market. And so I think our ability to sell into enterprises products that are already good, and again, once we bring them together, one simple, very high quality product, while also having products that are available to the mid market, and that includes like Web3 wallets, right? Like Coinme currently is used in the Exodus wallet, for example, right? So there's a lot of examples of like where I would expect like wallets will really appreciate having something easy like this. Apps, every app should have the ability to go cross chain in one click, deposit directly into a swap or earn product. They should also have on and off ramps. So that's a part of the segment that I think is already being served and frankly is quite competitive. Our ability, what Polygon really brings, is that ability to go out to enterprises who often already know Polygon, trust Polygon, and bring those products again in a more like consolidated way to them.
Okay, so now tell me more about these two acquisitions, Coinme and Sequence. What do they do, and how do these puzzle pieces fit into your bigger picture?
Sure. So Coinme is provides what they refer to as crypto as a service. So the general idea is the ability to, through an SDK or API, be able to convert your fiat into crypto. That's generally the basic service. One unique thing that Coinme has, and frankly that is more known for, even though it's a small part of his business, is actually cash on-ramps. So the ability to convert like physical cash into crypto. Now, we view this as incredibly valuable. And the simple reason is if you are somebody who wants to send money back home anywhere around the world in the US, it's not easy to do that right now. But when you can just take that cash, convert it into stable coins and send those stable coins, you actually do fulfill this view of like actually like banking the unbanked and actually giving them access in a better way than what currently exists. And so there's that very unique proposition that Coinme has. But in general, it's this ability to on-ramp into crypto in whatever that might mean, including stablecoins. And so when we talk about the open money stack, we think of like the Polygon chain, and then we think of, okay, on-ramps and off-ramps. The next two parts that we think about are wallets and cross-chain infrastructure. And that's where Sequence comes in. So Sequence has been building wallets as a service for the last 7-8 years now. Very battle-tested infrastructure. And so we want to make it easy for anyone who wants to use their open money stack to spin up a new wallet and offer that. On top of that, they released a product recently called Trails that I'd argue is the best cross-chain interop experience. It's a very high level up on like the app stack. It's like more of an intent-based framework, but it's currently used on a project that we incubated at Polygon Katana. It's currently used as like the main experience over there. And the really cool thing about it is people think of like the cross-chain experience as I go to a bridge, I bridge over, then I go to the app that I want to use, I deposit into that app. This is actually like a SDK that the app uses itself. And in Katana, for example, you can go and just click earn. And from there, you're just going to select what asset you want and what chain you want it from, and then what asset you want to deposit in. And you just earn. And so that is the type of cross-chain experience that you want, like a very seamless one that is like actually integrated in the experience. Just like when you hit earn, you say, do I want to pay with a debit card or a credit card? It's the same idea. And so when we bring all of these things together, we get this comprehensive stack of a chain, on-ramping and off-ramping. You get the wallet, and then you have the ability to move funds from any other chain and to any other chain. And that's kind of like the core components that we get. And then the last part that's really missing for the open money stack to be viewed as a whole is really this idea of like being able to do something with your funds. So whether it's burning or swapping or holding an RWA as an investment, like lots of different options there. These are things that are already on Polygon POS. They're also things that will tap into really where the best experiences are, but again in this single API.
All right, so in a moment we're going to talk a little bit more about the details of what this means and the significance for Polygon, but first a quick word from the sponsors who make this show possible.
Looking to unlock your crypto's liquidity? Figure offers crypto-backed loans with an industry-low 8.91% fixed rate. They're the only major provider with decentralized MPC custody and new liquidation protection. Take out a loan at figuremarkets.co/unchained.
Back to my conversation with Marc. So I've seen you call Coinme's cash to crypto on-ramp a Trojan horse. So explain, what's on the other side of that gate. What is in the Trojan horse?
Yeah, it's a little bit of what I touched on earlier around this physical cash on-ramp, right? So when we are in conversations with anyone about wanting an on-ramp, most people think of it as just a digital on-ramp, like, hey, I can pay with a debit card and get on. And that competitive landscape is like really tough. There's a lot of like people who do that, like companies that do that very well. The Trojan horse is being able to do that with cash. So why is this so unique? Like you think, well, people don't want to like walk over somewhere and like deposit cash and then like receive crypto and go use it and that. There's a few things. So first is, anytime you're doing any electronic, transfer, there is some risk involved with it in some way. And so you're either being charged higher fees or the one who's actually servicing that has, chargeback risks, fraud risks, things of that nature. With cash, you eliminate it. So you can think of when you onboard to an exchange, in some cases, in most cases, you can't actually use those funds immediately, or you can use some small portion of those funds immediately. With cash, you can use it immediately. And so there is this ability when we talk to like apps, they're like, okay, I can actually like offer this in 50,000 locations around the US. Like I might as well do that. The thing is, once you have that integration done, the next question is, well, why don't I just use Coinme for the other things that they offer? I already have that integration done. And that's where I think that kind of like physical cash on-ramp provides like a unique kind of wedge into conversations that you wouldn't have if you did not have that.
Okay. And I also wondered, so Polygon once powered crypto features for Starbucks, Reddit, DraftKings. Those were all experiments. They didn't last long, but I wondered what you learned from that wave of, working with these consumer apps and how you're applying that in in your new iteration.
Yeah, I think there's been, so I've been actually one of the most vocal ones about like us having made a mistake when we were doing that. And the simple reasons because, back then it was experiments. It wasn't things that were really going to like drive on-chain volume. And I've always said since I took the role as CEO, I'm going to do things that actually like drive on-chain volume, like period. That's going to be my focus. But there are benefits from that experience that are actually very, very meaningful. One is the brand reputation. When we go talk to an institution or an enterprise, Polygon is either like a known name or it's a trusted name because Starbucks and Nike and Reddit and all the others have chosen to work with Polygon. So that has like, when you're in the enterprise and institutional world, that has a lot of value. The second one is just how we work internally. It's this, there's like, when you talk to like a Web3 like app, it is a completely different world than when you talk to an enterprise. And understanding the type of service that they want, how we should offer that service, the type of relationships that they want, the type of environments that they want to, do sandboxes in. These are all things that we have now done quite a bit. And most others who come from that world don't really, don't have that experience. So like they just don't get it right. The last thing is one that's actually really unique that I think most people probably don't appreciate. It's actually a cultural one within the company. So a lot of like crypto companies try to like convert themselves into like these non-crypto companies so that they can like do this. And this is something that Polygon did at once. What often happens is they just lose their like Web3 roots completely, or they're actually, non-crypto natives who are coming in. But the reality is that what we're offering is a hybrid where you want to have a deep understanding and bring value add as crypto natives, but you want to be able to offer the type of service that enterprises are used to seeing and want to see. And this is something that I think we're just uniquely positioned to do as a result of all the experience that we had.
And I also wondered, so, you obviously have the Polygon token as well. So with this shift, what does that mean exactly for the token? How is that going to be used in this new payment stack?
Yeah. So ultimately for us, it's all about driving volume to the chain, period. It's always been the case. And I think we just have a much better ability to do that now. And, I often give like the analogy of like other networks and payments networks specifically. So, one of the debates that we had internally and that's been debated a lot is like how much volume can like, payments, which is a race to the bottom, really create. And the thing that I often point people to is like Visa's like annual report. And Visa's annual report includes like a line item that is $17 billion and of revenue. And everyone always says that's volume-based transactions. That's how Visa works, but it's not actually. That's only like part of what Visa does. The biggest actually part is this 10 cents or so and sometimes less per transaction that Visa captures in a transaction-based model, which is exactly how a blockchain works. You can translate that $17 billion of volume being about half of Visa's revenue. Visa's worth about $650 billion. So you can translate that to $325 billion in value. And so, my view is if Polygon can capture a good portion of that, then you're going to see a absolutely massive outcome in the value of the token because the tokens ultimately captures that value.
And, I'm sure you're very well aware that stablecoins is an extremely crowded space. Just in the last year, we've seen so many announcements and launches and all kinds of things. And, already we have heavy hitters, Tether and Circle are probably the best known. But, we saw Plasma, we saw a stable launch, USAT, Tempo, or, some of these were just announced. Tempo, Arc, there's PayPal there. I mean, there's just so many. I mentioned Codex earlier as well. How do you plan to compete?
Yeah. Okay, so there's a few parts of this. First is we definitely don't compete on the stablecoins themselves. This is very intentional. Many of those that you named do compete on the stablecoins themselves, which creates issues because people do want to use different stablecoins. And as we've seen, like businesses want to create their own stablecoins and actually earn the revenue off of those. So I think there's a differentiator there. That's obviously not enough, but it is one. I think the second thing is to recognize is like payments in general is like a game of partnerships. The number of payments companies that are competitors who work together is probably higher than what you see competition working together than in any other industry. And the simple reason is because you need to fill gaps and you're willing to use the one who provides the best service to fill that gap. And so I expect us, like several of the names that you named, I mean, like we do already work with several of them and we will continue to work with several of them, right? And so I don't really think that like prevents any kind of like growth or anything like that. It's just normal. Now, when it comes to like how do we actually compete, like what gives Polygon an advantage? There's a few parts. So first is almost everyone that you can name who is doing this is going to launch a blockchain. It has not had a blockchain that has matured over more than 5 years. And that maturation is not just from a technical perspective, but it's also from an infrastructure perspective, an ecosystem perspective. Like it takes a long time to get a blockchain to have on-ramps throughout the entire world that actually work well, and to have use cases in every area around the world, and to have the ability to on-ramp and off-ramp that anywhere around the world in a seamless way. That's something that Polygon fortunately has you could say accidentally for payments purposes, but has built over the last like 5-6 years. The second thing this does is it gives us distribution that others don't have. So most incumbents in the payment space operate in like local like regions. They don't operate globally. That doesn't exist really in payments in a meaningful way. It does in some unique situations, but generally speaking, you focus in certain areas. Like you can name 10, 20, 30, $50 billion companies that are just like only EU, only US. And that is something that's very unique for us. When we look at what we've already built, we're like, okay, we already have incredibly strong relationships in LATAM. I think I can't really think of a fintech that uses a blockchain that does not use Polygon right now. In Africa, we have incredibly strong relationships. Biggest PSP, Flutterwave, just announced that they're going to be launching with Polygon. But we've always been strong over there. India is obviously like the home of Polygon in many ways, incredibly strong. Southeast Asia, when you look at like SGD stablecoin, you see more volumes there than others. And you see things like dLocal that are on Polygon. Revolut has done more volume on Polygon than anyone else out in the UK and in the EU. So we are very global. And we have a team, and it's a pretty big team, frankly, that is regionally based and that has all of these relationships. When we now want to gain adoption of the open money stack, this is something that we can do at global scale in a way that others have not done before. So this gives us like a very good advantage. And then the last advantage that I'd say is that it's this, I mentioned at one point, it's this on-chain first mentality. If you come from a typical payments background, like your goal is to make BIPs. In fairness, we want to make BIPs too. Like that's part of the reason for these acquisitions, but that's like ultimately like why you exist. That's not why we exist. We want to move all money on chain. And that does not mean move money on chain and then have it disappear. It's like move it and keep it there. And when you do that, you need to think about things differently. It's not how do I on-ramp somebody, move their money on chain and then off-ramp them. It's how do I on-ramp them, move their money on chain and then give them things to do on chain. And that does require thinking about a wallet differently, thinking about identity built into a wallet differently, thinking about like hey, I don't need to be able to like offer these off-chain burn products. I need to on-chain burn products and like how those actually, integrated with the rest of the experience. So when you bring all of these things together, we kind of think about it as like we actually have a significant advantage even over incumbents. But the real that like people hate to hear, but is the reality. It's like it's all like co-opetition for the simple reason that like stablecoins are going to grow like so massively that like we can do decent and we will do phenomenally well. And if we do phenomenally well relative to competition, we'll probably be one of the biggest companies that has ever existed in the world. And so there's plenty of room for like everybody to win massively if you actually believe like money is better on chain. And I think it's like not debatable that it is better on chain.
It's funny. So my next question for you was going to be about decentralization. And I just noticed you just said, if we, succeed phenomenally, we'll be one of the biggest companies in the world. And, I was wondering, with this shift, how you're thinking about decentralization, because this whole conversation, it does sound more like I'm talking to somebody who is the CEO of a centralized company, which I know you are for Polygon Labs, but obviously the Polygon blockchain is supposed to be more decentralized. So explain how you're thinking about decentralization with this shift.
Yeah, look, I think the whole point of blockchains is to have a certain level of decentralization that's necessary for its use case, right? So Polygon blockchain has, over 100 validators. It is a completely decentralized blockchain. The best way for the Polygon blockchain to have as much activity as possible is for centralized companies to push as much activity to that blockchain as possible. And so as a centralized company, I want to build an absolutely massive centralized company that can push as much activity onto that blockchain as possible. And then when we do that successfully, what we're going to have is an absolutely massive company, and then we're going to have an absolutely massive blockchain. And both of those things are ultimately symbiotic in the goal.
All right. And last question, you might have seen that Vitalik Buterin, the creator of Ethereum, has warned that today's stablecoins are fragile and overly dollar dependent. And I wondered, if you are thinking about those issues as well when you're making this push.
Yeah. So 70 or 80% of all non-USD stablecoin volumes are on Polygon. We have over 60 stablecoins on Polygon now. And I think there's 18 different currencies on Polygon. We are very big believers that FX is going to be incredibly important. When you think of the why it is that we've got such dollar dominance in stablecoins, it simply comes from the fact that trading is really what started things, right? And so everybody just traded in dollar dominant, and so you just wanted more and more. But the more we embed stablecoins in the physical world, the more you're going to actually have people that need and want their local currencies. I am very much a firm believer that if you look at the amount of dollars in the world and then compare it to what's that going to look like relative to stablecoins, I do think you'll see an increase in dollar denominated stablecoins relative to others, simply by the fact that it does give dollar access, which is one of the value adds of stablecoins. And so you will have countries like in Argentina, for example, where people choose to hold stablecoins intentionally in US dollars, and they can hold more of them than they could ever hold in actual digital or physical dollars historically. So I would expect a shift. And let's leave aside other macro issues, just all things else being equal, you'd expect a slight shift into USD based stablecoins. But from our perspective, FX is a $7 trillion a day market. And that is more money than most people can conceptualize. And so being able to move a portion of that on chain is going to be really, really important. There are markets that are not available 24/7, 7 days a week right now. They are available all the time on chain. And so I just strongly agree with Vitalik, and it's where we spent a lot of time. And I think that the more liquidity we can get in FX pairs, the more we're going to be able to see the shift towards not just USD stablecoins, but more broadly stablecoins for other currencies as well.
All right. Well, Marc, congratulations again. And I'm excited to see where this goes. It's been such a pleasure chatting with you. Thanks so much for coming on Unchained.
Thanks again for having me. Appreciate it, Laura.
Today's episode is sponsored by Figure, which is transforming financial services using blockchain. They're the largest non-bank mortgage lender in the US, with over $19 billion unlocked on their lending platform. Now they're offering industry-low crypto-backed loans at 8.91% interest rates at 50% LTV for BTC, ETH, and SOL. They differentiate themselves by offering decentralized MPC custody, which protects your crypto ownership in a segregated wallet. They've also recently launched liquidation protection to protect you from liquidation during large price drops. Whether you're funding a major purchase, investing, or even buying more Bitcoin, Figure makes it transparent. Visit figuremarkets.co/unchained to take advantage of their crypto-backed loans today.
Hey everyone, I'm Kain Warwick and welcome to Uneasy Money, because what happens on chain never stays on chain. I'm here with my co-host Taylor Monahan, security at MetaMask, and Luca Netz, CEO of Pudgy Penguins. One quick thing before we start: nothing you hear on Uneasy Money is financial advice. We're just three builders talking about what's happening on chain, and we want you to always do your own research before aping in. You can find all our disclosures at unchainedcrypto.com/uneasymoney. All right, welcome back, Luca. Happy New Year.
Happy to be back.
All right. This idea that like the bad times of December was all people in America rotating out for tax loss harvesting or whatever seems to be actually maybe true. It feels like they were just selling for tax losses. Like it was like literally like midnight on the 31st. In like Pacific time, and then the selling just like stopped. It was like just like massive. Every single pump, like you look at the 1 hour candles, it's like goes up, nuke, 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 and then that bot got switched off at midnight in PST. So what's been interesting is like so Bitcoin's gone from whatever, like 85K to 97 or something. We're about to go over 100K again. But let's talk about Monero, because we are getting some alt action at the moment. We had Zcash before the end of the year, late last year. And now Monero just crossed 680, which is I guess the all-time high.
No, Monero is at 780 now.
Yeah.
Oh wow. Okay. All right. Should have aped. Should have aped. So Peter Brent compared Monero's long-term chart structure to Silver's decades-long consolidation before its historic breakout, suggesting that XMR may be entering a similar phase. I love the hopium there. That's amazing. That's Monero is basically Silver. But okay, I mean, it seems to be working. So I think one of the more interesting things for me about this is that Monero and Zcash in particular, both of them, have had a ton of issues with like exchange delistings, like particularly Monero, right? Like getting delisted, regulatory scrutiny, all of these issues, as well as like I think some internal, they're old tokens, right? So their governance is a shit show, as always, right? Every old token, every Dino token accumulates like crazy governance nonsense. But it seems like the privacy meta is back. It seems like we're really in this mode where people are looking for on-chain privacy. We're trying to solve these things. There's a bunch of things on Ethereum as well. It feels good. Like this feels like a fundamental thing that we can rally around, that, you know, we have the technology to do private on-chain transactions.
I still don't understand this chart though. Like this is a wild chart.
But Zcash was the same. It was like 30, 30, 30, 30, 800. Like,
yeah, but that was like, I guess, a bit more clear. Like there was a lot of pumping people. Lot of pumping people.
Fair.
I'll tell you this, in a world where you think AI is going to be even a fraction of what we think it's going to be, I think these privacy Dino coins, either Monero or Zcash, are going to be really good bets. I think logically, you're starting to see the sharks that are starting to, swim around these two coins specifically, right? They have the standing of test of time, which I think is important when you're looking at like assets that, you want to make a case to be worth, $1 trillion or $100 billion. So I don't think like a new player could come in. Obviously, I know a lot of new players are building privacy, and there's some chains, ZK Sync has obviously been doing that for a while. But I think from an incumbent, hedge to the AI, world being taken over, and this idea that like bajillions of AI agents are going to be running around the internet, and everything is going to become exponentially more transparent. Digital privacy tokenized via a fixed supply is actually going to be extremely valuable. So I would take the bet that like over the course of 10 years, if there was going to be, I would be surprised if those two weren't in the top 10 performers over the next 10 years in crypto. I'm personally making a really big bet there. It clicks logically. It's obvious. There's a ton of one-liners around it that I think sticks with people. And you've got all the right players starting to buy and accumulate this stuff. It's the whole, Naval, Chamath, and those guys go to swing big. And I think this is, anybody who understands AI understands that like something like this is going to be very valuable. I wouldn't, not financial advice, but this is a bet that I'm personally making.
So just we've talked about this a little bit, like regulatory headwinds across all of crypto. The tokens that were hit the hardest by this are obviously the privacy tokens, right? And like privacy is in its own category of like regulatory overreach, whatever you want to call it, right? It's always, even when during the ICO boom, there was still like scrutiny around Zcash and Monero and them being used for like dark web markets, and like it's just another level. Like, you think DeFi gets like scrutiny, then the privacy coins, obviously Tornado Cash then on Ethereum, similar issues. So it's a bit hard for me to imagine, even in a world where like securities regulation shifts and we start to get some of the kind of rulemaking process that we expect, that privacy doesn't have like still a bit of a fight ahead of it. Like I think it's not like a clear thing to me that like we are in a world where privacy is just fine now all of a sudden, just because we've got a little bit more clarity around like other regulatory stuff. Like this is its own category.
But that's where that energy that I think that like Bitcoin and pretty much everything else is kind of lost, right? Like that cypherpunk energy. So when like Peter Thiel says like I'm selling Bitcoin because like it's lost that cypherpunk energy, like what would he buy, right? Yeah. That like would bring that back. They want to fight the good fight, and then like when you're looking at situations such as the United Kingdom, where you're posting on social media and you say the wrong thing and they're going to throw you in prison. And obviously the fight in the States, at least, you're in Australia, Kain, and I know it's a little bad over there. In the States, it's a little bad. It's getting, worse than it's ever been. Obviously, I think we're addressing it. But, in a world where censorship and all of these things are actually more prevalent, at least in my short lifetime, I don't remember a moment in my lifetime where censorship was actually playing such a big role. Maybe, a couple of years ago during the Biden administration was probably Pico top, but it's still a bad thing. And I think this is a very contrarian, rebellious category that I think is going to accrue a ton of value to all of those doomers and preppers and, cypherpunk, going against the grain type of guys. And I think there's huge value that could accrue there through, I'm actually would be curious from a technical perspective, Kain, Tay, you two definitely know better than me. What's the difference between like a Monero or Zcash? Which one do you guys like more, at least from a technical basis? Obviously, it seems like Monero might be a little more pure in its privacy approach, but do you have any insight there, actually?
So the main thing that's preventing you from having like good privacy with Monero and Zcash is sort of the same reason that a lot of threat actors don't use it, which is that a lot of privacy comes from liquidity. So if you're the only one walking into a room and then you walk out of the room, whatever happened in that room, I didn't need to see you do it because you're the only one in there. So like if you go in there and you like graffiti the wall or something, if you're the only one that walks in, the only one that walks out, that's still like more than sufficient evidence to say that you were behind the graffiti or whatever. And so, with, let's say like retail users or like average people who are just trying to like create that separation, totally fine. Both are totally fine. The technicals of XMR, like the way that it operates is just completely separate, like completely technically different. They have these things called ring signatures. So basically like you're just like creating okay, I'm gonna like get blown up for describing it like this. Basically, you're just creating like a whole bunch of fake transactions, and you're hiding in the mess. Like that's where Zcash is actually like technically it's all ZK.
Obfuscation versus like moon math, right? Like yeah.
And part of the reason for this is that when like XMR first became a thing, like the tech just wasn't there yet. Like the math,
invented the moon math. Yeah.
The math is hard. It's computationally intensive, and then you have to put on a blockchain. I will also remind people that like most of the ways that your privacy is unprivaced is these days like still less about the on-chain. I know everyone likes the big long like Zach XBT threads where it's all the on-chain. It's super fun to do that, but the reality is like
it's IPs and triangulating like all of that stuff. Yeah.
Because you're still on your device, you're still on the same device. That device is still talking to like 8,000 advertisers. You still have a huge amount of technology that's tracking everything you do, including like the sites that you visit. And then also people are just really careless with their like OPSEC in general. So for example, if you're saving stuff in your Google Drive, your seed, your addresses, your screenshots, turns out that's super not private, guys.
Yeah. It doesn't matter how private your on-chain stuff is. So you mentioned liquidity, right? And this is something that like I think about a lot. Building Infinex, because we are going to support Zcash. I actually cooked up my own passkey Zcash wallet, right? And tested it out. I had a long thread where I thought I lost like a couple $100,000.
Oh my God, that thread, Kain, it like gave me actual real anxiety reading it.
So like usually like when you're vibe coding, right? Like you're just doing stuff and like it's like there's no real risk here. And like I even have a cauterized machine that's like not on my like it's like a separate machine, so it can't do anything, can't do any damage. And then I'll be like, let me transfer 500,000 over there and see what happens. And like it was actually fine. The funniest part was it was totally fine. The code was fine. It was just like a bug that it couldn't find the note, right? But I was sitting there for like 4 hours. I was like, pretty sure I've nuked a couple $100,000. But when I burned the DAI that time, because I mentioned that in the thread as well, it was like 2 a.m. I'd been up for like 18 hours and I had like 5 different tabs open on 2 different screens. And I was like copying and pasting stuff. And I literally, like for some reason, I forgot that there was a burn function on DAI, on Optimism. Like it's not part of the ABI on the, like it's a different function call in the like mainnet contract versus Optimism. Like they rewrote it for some reason. And there's 2 burn calls and they were both like the 7th function, and I just like copied the wrong one in the wrong browser, and I went to bed that night at like 2 a.m. And my wife woke up and she's like, "What? Like everything okay? Like you're like up pretty late?" And I was like, "I think I might have burned $10 million." And she was like, "Huh? Okay. Good night." And I just went back to bed because she was like, "You don't seem that worried about it. I'm sure you'll figure it out." But
yeah, she's like, I'm not gonna dive into this one.
Yeah, she's like, I'm not touching this. So let's move on to I mean, one of the things with the market coming back is meme coins have come back, and therefore rug pulls have come back because they are intrinsically tied together. So this one was like pretty crazy to me. Eric Adams made an NYC token. This is like the 15th NYC token, by the way. If someone makes an NYC token, like don't buy it. Like that's absolutely financial advice. Like do not buy a token for New York City. It's always going to be a scam. There's so many grifters in New York City. Like just don't do it. So Eric Adams made an NYC token and it started pumping. Then they removed the entire liquidity pool, which was like 3.5 mil. And then they made a statement being like, "Oh, we're just rebalancing, I guess."
Yeah.
And then they did the like classic post rug pull. We're putting the money back in the chart now that it's crashed 99.99%. It's just wild. Hayden, it was so bad that Hayden from Uniswap came out and was like, This is just awful and incredibly stupid any way you cut it. Part of what's so sad is celebrities and politicians can easily monetize their fame without scamming. Like, I don't know. This maybe was more efficient.
SafeMoon the SafeMoon guys got 10 years for this, so I don't know. What
crazy.
You know, but the way that these are structured, right, just so you know, is like it's a licensing deal, right? So like an Eric Adams, you know, doesn't really get in trouble, right? Because he's just licensing his IP and, you know, paying for a promotion, obviously like undisclosed. Like the worst he could get is like an FTC, you know, undisclosed advertisement, right? But it's pretty fucking nefarious if you ask me.
There's a like an OG scam. There's a really good book actually, which has like all of the old scams and grifts that used to happen in like the US. Like literally like every single, it's a super long book. It's like 500 pages. I'll find the name of it and we can shill it next time. But it's super interesting. Like just every type of like confident scam and grift or whatever. One of the scams is people used to go around trying to sell the Brooklyn Bridge. They're like, oh, it's being torn down, selling it for crap or whatever. Like this is the crypto equivalent of that. Like I'm selling the New York City IP. Like it's New York City coin, bro. Just buy it. It's amazing. So yeah.
I don't understand how it just frustrates me. Again, I think I've said this before on the show. It frustrates me that like these like really blatant scammers who are just truly like there's nothing of value here can do this and like everything's fine. And meanwhile, that's taking a huge amount of attention and money away from like so many other more valuable things. And there's no recourse for anyone. Like there's no like we can all hope that like someone might get this bro in trouble, but the reality is like we all know at this point that he's not.
But the market, the problem is the incentives are set up in such a way that the market doesn't learn because you can make money on this. Like you can make money on this. In fact, these kinds of like scammy grift things that are like very transparently going to end, it's just a PvP game. Someone snipes it, someone bundles it, someone, you know, like there's people basically fighting it out in the charts, but then it obviously spills over because it's like the ex-mayor of New York City, which is fucking wild. But like, you know, you could imagine like this could just be like an underground knife fight and people are just betting on people like trying to kill each other, right? Like it's the same, this like it's literally just a PvP thing and people are betting on it. Like that's it. But
and they're all and everyone just thinks that they're gonna get out.
Yeah. That's it. Like it's just like I'm gonna buy it, I'm gonna sell it. And some people win, some people lose. I mean, part of the problem is like if you are going to go and play a game like that, right? And you know, by the time we got to the end of the last meme coin cycle, it was pretty clear that it was pure PvP. Like there weren't even like everyone else got washed out, right? It was literally like the bots and snipers fighting each other, and that's why nothing could pump because it was just a bunch of bots and snipers and bundlers and who could be fastest. And then it would unwind in like 20 minutes. Right. But then people are like, it's the Arrested Development meme.
Hey, look, there was 3 weeks there in that meme coin run. That was fucking awesome though. It was PvE. It was not the fridge. I know some Australians had the fridge.
Dude, one of our ex-employees made the fridge. That was crazy. Yeah, that was crazy.
$100 million fridge.
Yeah.
Lord. It's just, I don't know. It's also a bad look when it really spills into like in real life like this.
Yeah.
Like there's just so many people who are just like waiting for crypto to do things like this so they can fine.
Like, what I'm saying.
Stop involving politicians in our nonsense.
If you want to have an underground knife fight and bet on it, cool. Don't like bring the mayor of New York to fight. Like why? Like just like what are we doing?
That's the right take.
Yeah. All right. Before we go any further, here's a word from our sponsors. Let's do it.
Multi-Chain Advisors is an emerging technology growth firm that has helped create over $50 billion in enterprise value for more than 80 clients, like Pith, MoonPay Commerce, and Wormhole. They've worked with some of the largest and most impactful companies in the space. They're the partner you want when you're navigating markets and trying to break out from the noise. They help navigate TGEs, go-to-market, BD, and partnerships, capital markets advisory, PR, media placements, KOL activations, and more, driving execution from launch to scale. Their results are measurable. To learn more and start building real traction today, visit multichainadv.com.
All right, Vitalik's walkaway test, which is weird. I've never heard the term walkaway test. I feel like that was invented by Vitalik 2 days ago. So Vitalik published a post outlining what he calls Ethereum's walkaway test, arguing that the protocol should remain secure and functional even if the core devs and institutions stop maintaining it. The idea being that Ethereum shouldn't rely on humans, emergency coordination, or benevolent maintainers to keep running. Instead, critical properties like security, censorship resistance, and finality should hold by design. That you know, the chain should be able to like ossify to a point where it just works, even if we're all dead. Gabe Shapiro mentioned lawyers call this the Bahamas test, which is a bit on the nose. If anything, like anytime I read the word Bahamas, I get PTSD from FTX. But anyway, meaning the tech should still work if the team disappears and stops supporting it. If only the FTX guys had fled to the Bahamas and left us all alone. So Vitalik added a stronger version to this, though. Users should remain safe even if the team becomes actively adversarial. And that one, we can get to that. But like just fundamentally, and I know, Luca, you're going to have a take on this, right? Like I love Vitalik. I think he pushes us to be better in a lot of ways. But then I look at the world and I say, given how rapidly changing the world is, like what possible hope could we have of building a thing that is still relevant even in like a year or 2 years, that can ossify? Like the world is changing so quickly. We have so little information about what the future will look like. We're, maybe about to go through a singularity. Like it just feels a little aspirational to be like, we should, and Vitalik's not saying like tomorrow, right? But like, I just don't know that the world starts to get any easier to reason about in 2 years. Like it's only getting worse. So, I mean, Luca, I'm sure you've got thoughts here on this.
Yeah, my take is, I've been saying this for years, but there's two different type of blockchains, right? There's a blockchain that is a human necessity, one that's important for the future of humankind, something that can stand the test of time, that, if everyone dies, it can still be there and usher that, basically that layer of communication so that people can transact, because transacting is a basic human right. It's a freedom. And right now, anything other than blockchains don't, personify that freedom the way that, like blockchains do. And I think Ethereum is the only, maybe one of the only, but it is the, blockchain, immutable blockchain that basically I think empowers that freedom. On the other side of it though, I think there's blockchains whose businesses are to compete with Visa, MasterCard, Stripe, PayPal, and they are borderless, payment rails that anybody can build on top of. And those businesses are performant. Those businesses need huge workloads, super fast transaction speeds, and are built to perform. Now, the conundrum, and we saw this until Tom Lee and the ETH treasuries came and bailed everyone out, is one is super important. As a human, like I want Vitalik to go on, and I'm not like the biggest ETH holder in the world. So as a human and not the biggest ETH holder in the world, I want Vitalik to go and issue, and to build that vision, right? On the other side of it, I don't know if value accrues to that vision in a way that the others do, because the others are built to perform like a business in a way that is predicated on driving value to stakeholders above all else. That's what you do when you build a business. And so the issue is remember, again, until Tom Lee and crew started bailing ETH out, ETH was stinking up the joint, and they were getting a lot of shit. And you could tell the shit bothered them, right? You could tell the shit bothered ETH. It could bother the foundation. It bothered a lot of people that I think didn't believe they would get bothered by it, or they had seen so much.
There's only so much hatred you can absorb realistically before you're like, this is like we built. Look at this amazing thing we built, you fucking monsters, right? Like, why do you keep shitting on it? Like, just because the price has been sideways for like 2 years. But like, I get it. I was one of the ones who was like, the price is sideways because we're not like actually selling the thing, right? Like, we're not actually going out to the world and selling it. And if we don't sell it to the world, then the world won't value it. That's how the world works, right? Like, we can't just sit here and.
But you can't sell it if your competitor is faster, more users, more volume, more things like that, right? And they conflict because having the fastest blockchain is not having the most immutable blockchain. Like, do they contradict each other? You two would know better than me, but like they probably do, right? Like,
Well, the thing that's super interesting to me about all of this is like, we are getting close to a world, and in 2018, when we're sitting there and it was like the merge is coming, and then it didn't come for a very long time. Like the Ethereum technical roadmap felt for a very long time like it was going to be decades long. And somehow in the last like 2 to 3 years, it really feels like it's compressed. And we've got some stuff coming that like it could actually be the most immutable and the fastest. Like they're like with the largest blocks and so like Ethereum has been cooking, the core devs have been cooking, like it's crazy. I can't even catch up with. I was having a discussion with our head of engineering, and we couldn't remember whether the like passkey SEPCA 256 EIP had been deployed or not. It was deployed like 6 months ago. Like, we're actually behind. It used to be that like you'd be like, all right, 2 more years and we'll get EIP 1559.
Yes, 2 more years. Literally everything.
Everything was like just a couple more years, it'll come. And now it's like things have been deployed and no one even realizes it.
Yeah. Yeah. I think that like, I don't know. I think that when Vitalik is going to like full Vitalik mode like this, I think it's easy for people to like get into the weeds on what he's saying and imagine that like everyone is operating like this, or like imagine an imaginary world where like everyone is operating perfectly as Vitalik dictates or whatever. The reality is like he's going to say things, people are going to take that, but then they're also going to keep operating by like the incentives and the business and everything else. And I think that's fine. And I think that like if you read Vitalik's writings as like a pretty sizable influential piece, but like it's not really actually gonna like completely change people's incentives, then it's like in my opinion, it's a better, like when you imagine the whole organism, it's just a better way of operating than when the foundation is pushing for the same things that like, everyone else is already pushing on. And I think a lot of people are like, but then like you don't have alignment and all these things. But I actually think that that's good. Like I think that you're going to get better outcomes when you have tensions and you're going to have to navigate these things and you're going to have to fight. I don't think anytime you have like a solid like one plan and then execute that one plan, I think there's like a lot of danger there. Because like if it's the wrong plan, then like you're screwed. So I don't know. I'm excited. Like there's so many things that Vitalik says that I'm like, I don't know. But the fact that he says them and the fact that he focuses on things that so often no one else is focusing on, I think that is super, super valuable because it's just like these little nuggets do stick with people and in ways that, ultimately will result in them being better, even though they're still focused on like, building actual businesses or, focusing on what user like end retail users want or whatever. If they have like a little bit of Vitalik in the back of their head, I think that's a good thing.
Yeah, I think that's fair. I mean, one interesting thing for Ethereum, right, is like, it's not something, you know, if you slice up from 2015, every 2 years, right? You've had some periods of time where it is like obviously working, right? Like it fits into the world as the world is at that time, right? And then you've got some 2 year slices where it's like not really working. And most of the time, those things are like, you know, expectations got too high, stuff's harder to build, you know, long-term investments in things that have not yet paid off, right? So, you know, like the whole of 2018, 2019, 2020 was like too much demand. Like the reason why it didn't work, it was like it hadn't caught up with how much people wanted to use it, right? And then we came out the other side of that, and then it was like, oh, now no one wants to use it, and it's like, whoa, hang on, like there's still the same amount of demand. It's just that, you know, we've got excess capacity. It feels like you take these like 2 year snapshots, and then you kind of look back sometimes like 4 years, and you're like, holy shit, imagine if we hadn't invested the time to do like, you know, the proof of, like the Bitcoin people were like, Ethereum is dead because of proof of stake, right? And like, you know, and like there was a period of time where even, you know, people like, even when I was like a crazy ETH maxi, like everything else is a scam, right? I was like, oh, I don't know about this. Like we've invested so much time. Is it actually going to be effective? Like, you know,
and is it going to ship?
Yeah, like can it?
That was like a big
is
question
like,
for years.
Yeah, like is this too hard? Like have we like tried to do something that is too hard to like rebuild a network on the fly? No one had ever tried it before. But one of the things that I think, you know, we can say for Vitalik and the EF, as much as like oftentimes it feels like they are doing things with too much of a long-term focus, at least for me, right? As someone who's like, we want action today, right? Is that most of the long-term bets, even if the timing has been wrong, right? Even if it's taken much longer to get there, they have paid off. And like, we're now in a period of time where like, it might be the best blockchain without any of the trade-offs. Like it might just be the fastest with the most block space, with, you know, the most censorship resistant, the most immutable. And then you go, holy shit, like I was an idiot to ever question this roadmap. What was I thinking? Which, you know, here we are.
Yeah, no. And the thing is, I think that like people, the thing about some of the, like these types of posts and like the values of Ethereum and the EF and a lot of the builders is that it's not just that they can be like inefficient. They can like really cycle into like some like completely like worthless little echo chambers of like, you know, where they're so, we see this a lot with like security things. They're so in the weeds and there's like big gaping, like there's a fire right in front of their face, but it's like, you know, perfect becomes the enemy of like, you know, moderately better. But I think that like you kind of have to take some of that in order to keep that core vision alive. You just have to figure out how to navigate that, right? Like how do you make it so that people are always striving for like the most secure and like the perfection in security, even though that drive for perfection is going to potentially impact your ability to like ship anything that improves the security or the UX or whatever. And I think Ethereum, especially if we continue to see sort of like the not the EF themselves, but the people around the EF and the people who are building and shipping, as long as we continue to see them empowered, then I think we're going to be in like a really good place. Because then you can let the EF focus on these things that are more long-term and harder core, while everyone else can focus on, you know, the best user experience for users and, you know, all that kind of stuff.
It does feel like though, and, you know, I think Luca, you kind of hinted at this, that there was a period of time where this disillusionment with like our competitors are out competing us did kind of hollow out the builders a little bit, and you know, the people who were building, that were like that were actually building the businesses or projects or, you know, things that were going to take Ethereum to market, kind of were like you know, this feels hard, right? Like
Luca said this Luca said this on the show. He's like, dude, I went to Solana and it was like way better.
Yeah. And so, there is this like, okay, we should give credit to EF when they get things right, and we should criticize them when they don't, right? And I don't think, for what it's worth, that everything we're describing around like the technical roadmap, the long-term investment, the like, very like resistance against expediency and like shortcuts, like I don't think any of that stuff is incompatible with also finding ways to like help curate the ecosystem, right? To like help, drive, awareness and like, yeah, I don't know. It's a tough one. It's a tough balance to strike, because you had this period where like there was a core builder group in Ethereum. Everyone knew each other. Everyone was really bought in. We're there for like the mission and, all of that stuff. It got so big that the distance between those people got a lot bigger, and there was nothing to kind of tie it together. And then competition from outside started to, make everyone question the long-term roadmap and focus and all of that stuff. So but here we are. All right. So
wait, Luca, did you want to defend Solana?
Working on my Wi-Fi. What do I need to defend Solana on? I can defend, but to your point, Kain, because I heard most of what you said. Like Ethereum's putting on a clinic now, and I totally give them their flowers. I wish they had been this way a year and a half ago, because things might be different. But everything that we're doing on the ETH side, I mean, dude, ETH's given me like 3 retweets in the last 3 months. Every time they do it, I like jump for joy. I do the monkey dance. I'm like, this is great. Sorry. Side story.
I have a video. This is years ago. I have a video, and my coworker Jordan was at my house, and we were working, and he was like taking a break, and he was like recording himself with my daughter, and then Vitalik retweeted me, and I literally screeched like a schoolgirl, and I was like, "Oh my God, Vitalik just retweeted me!" And it's in the video, like it's captured from. But it's like it hits so much harder when it's him, though. Like
EQ side of what makes ecosystems and networks work, right? Like everyone, I think, here is always excelled on the IQ side of things, but like there's like two sides of the yin and the yang, 100%. And like that emotional, Tay, that made you feel so awesome. I bet I know the feeling, right? Kain, you probably know the feeling as well. Like that makes the difference. And so they've been doing a really good, great job there. I don't know if you attacked any of Solana's technicals. I mean, I'll tell you, I still think from a consumer 0 to 1, if I'm like a new user, I go on Fan of My Fun Soul. I still think today it's probably still the best experience, but hey, I mean, dude, MetaMask is getting a lot better. The gas fees are getting a lot better. Everything's getting a lot better on the Ethereum side. So I don't know exactly what jab you took at Kain directly at Solana, but
no, it wasn't a jab. It's more like there was a period of time where the Solana competition really kind of created some disillusionment on the ETH side, because it's like we're being outcompeted. Also, we don't have support. Right. We can handle not having support as long as we're winning.
Yeah.
Like that's fine. Right. But if we're not winning and we don't have support, like what are we doing here? Right.
But the barbell's evening out, right? Like it is evening out. I mean, dude, for a year there, just everything was in Solana. I mean, app revenue, volume, no matter where you skin the cat, you'd have to be a little disillusioned to like think otherwise. But it's starting to play out. It's starting to even out a little bit. And I still think, who's going to win the blockchain race is yet to be seen, right? I still think we've yet to completely solidify one winner versus the other just yet.
And this is the thing, like we don't know what the world's going to look like in 2 years. We could have like flying robots that are like carrying us around to places, and like there's no cars anymore. Like it's like the idea that we can like finalize our blockchain design and be like job done feels not right to me.
I'll tell you, the place to win is the AI agents, right? Because in a world where an AI agent and AI doesn't have a social security, doesn't have an ID, it cannot bank, with Wells Fargo.
It can pick up an ID pretty quick, though. It can pick up an ID pretty quick.
There's some new ones too. There's some new models that it just changes your face.
I know, it's crazy.
It's so scary, dude.
It's nuts. It's really nuts.
You guys see the
All right.
new Claude-
So
Claude-
speaking
Claude work?
of bots and AI, this is an interesting arc, right? Like the X arc, the post Elon X arc. We had a period of time where let's not forget, you could link your NFT PFP to your X account, right? Like that was a thing that shipped right before Elon. And then Elon was like, nuke it. Nuke these NFT PFPs. It was my favorite feature ever on X, that like you could just like connect your wallet, like check which PFP, you could switch it easily. It was amazing. Got killed. Then Cashtags got killed. Not like stopped, but like basically nuked. If you use them, your post would get memory hold, right? Then there was like this algo shift, right, over the last few months, where almost every single person who's like 50, 100, 250,000 followers just stopped getting any engagement, right? Anyone in crypto, and almost all crypto content was getting funneled somewhere. I don't know if anyone was seeing it, but like I stopped seeing it, and the algo really started optimizing. At least this is like the appearance of the algo, right? And Elon's saying they're gonna open source the algo, so we'll be able to actually like check this, right? But it started kind of TikTokifying X in the sense of like there was only one topic you could talk about at any given time, and if you didn't talk about that, you'd just get zero engagement, right? Like zero reach. And then at the peak of this, Nikita, the head of product, who like is involved with Solana, maybe you know more about this, Luca. I don't know exactly what the relationship is, right? But Nikita's like, listen, guys, like this is not our fault. This is your fault. You guys are suiciding yourselves by like ruining your own reach by tweeting GM all the time. Now, this taps into like the InfoFi thing, where InfoFi became like, you know, I would see people, bots, whether people or bots or people with an account with scripting or whatever automation they were running, that had 150,000 posts on an account that was a year old.
No, they just reply guy like crazy.
Yeah, but it was like, well, hang on a second, like what the fuck are you doing? How do you think that makes any sense? And Nikita's like, if you do that, you have a finite amount of potential reach that you get. And I think a bunch of people retweeted and kind of attacked him for that. And then they were like, I'm not doing this. You're talking about like InfoFi reply guy bots, not me. I tweet twice a day. I saw like Bold Leonidas was like, bro, I like tweet a cartoon once a day and no one sees it anymore. And they used to. Like, walk me through that. Like, how is the algo? Like, what am I doing wrong, right? Then they're like, okay.
You know what would be a great idea, since we screwed up the algo so bad? Like, I'm sorry. They go, we're going to improve how Cashtags work, guys. Let's go.
But then like they showed this like whole thing where you can like buy crypto in the app, and you know, Elon's been saying this is going to be the everything app. It's going to be all of finance, all of whatever, right? I don't know. Make it make sense.
This is so bad.
Like it just feels like absolute insanity right now. I don't get it.
Well,
I don't get if they hate
Nikita backtracked it. He fixed it, right? But I think like this is an important part of like, I can't tell you how many times they've fucked with that algorithm, and our whole business, like, it really fucked with us bad. And so, you know, we've obviously made a focus to distribute our communities through a bunch of different platforms, which I recommend any builder and founder listening to like make that a really big focus. Because like even this month, I was like, I'm just not going to tweet. This is awful. Like, I just already know what's going on. It's another big tweak. And yeah, it just goes to show that, you know, you can't be dependent on any single platform. But they fixed it, and now it's back, and now it's good. Now's the time to ship that announcement. That probably also affected your Infinex stuff, Kain. The whole through.
Like, trust me, you know, like it was actually funny, right? Because the organic reach was almost zero, right? The inorganic reach, because bots don't care. Bots will brigade everything you do. They will find you, right? Like they don't need, like these are like hunter seeker bots that are like coming to FUD you, right? Yeah, so I think like it feels a little bit better the last couple of days. My barometer for this is Gainsey. Gainsey will always tell me how the algo's doing. He seems to have a sixth sense on the algo. Yeah, he was saying it seems a little bit better. So I don't know.
So
we'll
maybe
see.
it is fixed. I just know that like for a lot, it used to be my timeline was like crypto things, like 100% crypto things.
100%
and
crypto.
then every once in a while, something that was like super big outside the crypto sphere would get onto my feed, but like it had to be big.
But even then, even when it did, like the response was always like, shut the fuck up about Libya or whatever you're talking about. We're talking about crypto here. Like, get back in your lane.
Yeah, yes.
Like, everyone would like shame people, but it's interesting to see the incentives, right? Because crypto stopped actually working, you've got people that are like, well, I'm going to optimize.
They're just pivoting to like everything else.
AI and silver and like whatever, right? Like
it's super weird. Have you seen like Adam Cochran's entire feed? He's like, actually, I'm not in. He decided a while ago. He's like, I'm not in crypto anymore.
Yeah, good. That's a win.
He's just like a political commentator now.
I got served one Pudgy Penguin post in the last month, and it was a guy basically saying, if you don't pick a side, you're a fascist. Speak on Renee Good. Or don't. It's
they just say the words,
with a Pudgy Penguin I saw this last month. And it was about, I got hit with I got put in political Twitter, wherever that was.
Dude, it's so easy. I'm constantly tweaking my personal little thing. Because the thing is, like, there's two ways to really, like, if you don't want to see something or you want to see more of something, the easiest way is to use the share button, even if you don't actually, like, share it. If you say share, the weight on that is so heavy or whatever.
Yeah.
And so, like, every once in a while I get sucked into, like, political Twitter and be like, it's like a feed of, like, ICE stuff. And I'm like, I don't want to see this.
Yeah, it's crazy. But you couldn't escape it. You couldn't escape it for a while.
Yeah. And then the issue is that I'm constantly, like, even if I share like crypto stuff, though, it doesn't like do anything because I actually do legitimately share crypto tweets all the time. Like I'm copying and putting them into Telegram all the time. The way that I got rid of the political stuff from sneaking in is to share the little like the cat videos or like the whale who like or like the sugar gliders are a favorite in this house. We love our sugar glider videos, but then. Like it doesn't, I'm not actually fixing my feed, right? I don't actually still like get crypto stuff. I'm just like, okay, at least now the ICE agents have been replaced by adorable sugar glider AI videos.
Which is, that's bullish. But so I don't know. I mean, it feels weird to me that you would have like one of the most like culty engaged subcultures in online, right? In crypto Twitter. And you would ever fuck with that? Like, what is your fucking job, bro? Like, how does that one ship? Like, and then,
I think because you write it off with all the other stuff. Like at some point, you're just like, Jesus, like 90% of our spam, 90% of the scams, 90% of the GMs are crypto, and you just fail to realize like there's like an entire population of really like good. Super original engaged content and breaking news, and you're like, no, it's all GM. Which, by the way,
remember the whole premise for Elon fucking getting out of buying X, which thankfully he didn't manage to do, was the bots. He was going to shut down the bots, right? Bots are so much worse now than they've ever been. And like, in fairness, right, the technology has gotten significantly better for running bots. Like any cracked like 3-year-old at this point can cook up a bot army using Claude code, right? So I get it. It's hard to manage, but it feels like they have just given up on trying to like manage the bots and pivoted to this like algo thing, which is, I don't know. It feels weird. Like surely I get this is asymmetric warfare a little bit, right? Like, and the bots have no downside and X has all downside, but it feels like you could solve this problem. Like what was he was saying, like the algo's running on like the Colossus data center on like 80 trillion GPUs or something like that. Like fucking train that thing on bots. Like,
Yeah.
But they didn't fix
Yeah.
the scam links, though. You got to give them that, because for years they were
Yes.
actually dropping like phishing
Yes,
links on
fair.
your head. You
Fair.
know, so they did fix that. So
They
now
did
it's
fix
just like sloppy, like retarded AI LLMs running around,
fair.
which is
Yeah.
very annoying, and it
It's
doesn't
not as
inspire
bad,
me.
though.
It's what we mentioned an hour ago. Like when I speak to like the fudders, I definitely get inspired by the AI slop. It like gives me the lingo and how to communicate to the bullshit. But there is no phishing links anymore. So
Fair.
that is the
very
good
fair.
one.
Yeah.
We should.
But
we
part
should
of that,
credit
part
where
of
credit.
part of the reason there's no phishing links was that they basically just gave the power to you, the poster, so you could like hide the replies.
Yeah.
It wasn't necessarily that Twitter figured out how to like ban phishing links. Like they did make some tweaks to like who would show and how it would show and like, you know,
But they
et cetera.
trained
But
it.
like
But they trained that then on all of the like organic hiding activity, right? To like get the model to be able to, and then once
but like on the,
something-
for example, on the MetaMask account, right? Like we would tweet and then we would just go and it
just
used to be
hide.
you couldn't do anything. We would just hide them.
Yeah.
And then they would go, like they wouldn't be on, they reply super, super fast, right?
Yeah.
So you just sit there, you tweet, you sit there for 5 minutes, you hide them all.
hide. Yeah.
And then
it's done.
over time, they just stop replying to MetaMask because they don't get any clicks, right? Because it turns out that like the phishers do actually monitor their campaigns quite closely. And they stop
You're
all
like,
the
I could-
conversion rate things.
I love like just imagining, and I'm sure you do this as well, Tay. Like I love imagining the like 5 guys sitting in like a basement somewhere in Europe, right? And they're like they've got their like giant TV that's monitoring their stats, right? And their like stats are going down, and they're like, what? Like our conversion rate is just through the floor. What are we doing here?
It's true though. They do to a certain extent. It's not super well executed analysis, but like if it's not working, they go somewhere else. And I was talking about this earlier.
So if
like,
this hashtag thing works and Twitter now allows you to buy crypto on Twitter, like
it's gonna get
that's
really
not
bad.
priced in. I don't care what you say, that is not priced in. Like you want an alt season, that's where your alt season's coming from. If every single person on Twitter can all of a sudden just YOLO ape into any token.
Wait, define alt season, Kain.
Anything.
Like this seems like
Anything
a
other than
lower
Bitcoin.
brow meme coin season.
I got to hustle a Twitter listing. That's my new focus. How do you get
literally?
X?
You got to get listed on Twitter. That's the new meta.
that's the new 500% pump. Is the X listing?
There's no more Binance listing. It's like Pengu's gonna get listed on Twitter next week. I'm sure.
Yeah,
I'm sure of it.
Great. Okay.
All right, guys.
Alt season.
Let's wrap it up. I know we got a couple of hard stops. So that's it for this episode of Uneasy Money. Thank you all for tuning in. If you liked the episode, follow us on the Unchained feed on X, YouTube, or wherever you get your podcasts. We'll see you guys next week.
Awesome. Bye, guys.
Thank
you
you.
guys.